Bitcoin goes up, goes down, it has a variance, right? And so I think this way of looking at this thing stochastically and understanding this variability of something, if you don't have basic probability and basic statistics, you have no framework to understand it just
Exactly.
it's you're handicapped.
And that's
And
kind of
so
that's
it's
kind of what.
more that it's more that that's useful and not so much, the simplex method, which you probably won't use these days, but the understanding the framework for all this stuff is super useful. And I keep on finding uses for it, like the mathematical framework all the time.
Bitcoin's value is far from predictable. It thrives on volatility. One moment, it soars to new heights, and the next, it crashes, leaving investors scrambling to comprehend its erratic behavior. This fluctuation isn't mere chaos, it's a stochastic process, a concept from probability and statistics that describes systems influenced by chance. Much like the broader universe, Bitcoin operates in a realm shaped by probabilities, not certainties. In an insightful interview, renowned crypto analyst Fred Krueger explains that Bitcoin's wild price swings are driven by a combination of market sentiment, regulatory news, adoption trends, and macroeconomic factors. For instance, in 2017, Bitcoin surged to nearly $20,000, only to plummet by over 80% in 2018. Similarly, in 2021, it reached over $60,000 before sharply declining once more. These fluctuations aren't anomalies but essential to its nature as a decentralized, speculative asset. To understand Bitcoin's volatility, one must grasp statistics and risk management. Without these tools, interpreting Bitcoin's price movements becomes impossible. While the ups and downs might seem random, for those equipped with the knowledge of probability, the patterns can be studied, measured, and even predicted. Bitcoin's journey isn't about certainty. It's about adapting to the unpredictable and seizing the opportunities that volatility brings.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Leverage is going to get you in trouble every single time in Bitcoin. Like everybody who blew up, they all blew up because of leverage, right? That's why they blew up. It took me a while to really understand A, Bitcoin, the value proposition, and B, how to play Bitcoin, which is you do not trade Bitcoin. I do think that the one thing that gets people is this leverage. And it's just completely unnecessary because I don't care how much big your stack is. You really do not need to borrow 2x on it. There's just no reason to do that, right? And it's pretty simple math. Bitcoin can drop 50%. It can, and people are like, well, it can't drop 50% from here because it can only drop 50%. Well, you don't know that. It can drop 50% from anywhere. From any point, you have to have the belief that Bitcoin can drop 50%. And even if it's at the bottom of the support of some model, it can still drop 50%. It's a highly volatile thing, which can drop 50%. So if something can drop 50%, now it also tends to over time go up a lot. It is a very high performing asset, right? But it's an asset that can drop 50%. So if you are leveraged 2-to-1, there is a non-zero probability that you are going to get completely and utterly wiped out, over time. And, it's amazing how many people didn't get that memo. Just over and over and over and over again. That, I'm going to dart in and out. I'm going to be smarter. I'm going to wait. Well, you all these things may be true, but you're playing with fire, and you shouldn't play with fire. What you should do is you should take some percentage of your net worth and just put it in Bitcoin and literally not touch it until that thing is 10x. You should not have a situation where all of your money can get wiped out by some wick down. And you could say it'll never happen, but by definition, you need to compartmentalize things so that whatever you're doing, nothing can happen. And whatever you're saying is that black swan, we've lived through enough black swans now to know that black swans happen. And they happen not only with Bitcoin, they happen with finance. I mean, they happen all over the place,
Fred Krueger cautioned against using leverage when investing in Bitcoin, warning that it can lead to financial devastation. He explained that Bitcoin is extremely volatile and can lose 50% of its value at any moment, regardless of support levels or market trends. For someone who is leveraged 2 times, a drop of that magnitude could completely wipe them out. Krueger urged investors to avoid this risky gamble, pointing out that while the likelihood of total loss is small, it is always a possibility. Instead, he recommended allocating a portion of one's net worth to Bitcoin and holding it long-term, without making any short-term move. Krueger emphasized that crashes are inevitable, referencing historical events like the 1987 market crash, Japan's 1990 collapse, the 2008 financial crisis, and crypto crashes in 2017 and 2022. He highlighted the current global economic instability, noting rising debt levels and uncertainty, and advised against overcommitting to Bitcoin, even for the most bullish investors. His recommendation was to allocate 60 to 70% to Bitcoin, leaving room for opportunities during market downturns. Inspired by John D. Rockefeller's strategy, Krueger stressed the importance of maintaining dry powder reserves for emergencies or discounted investments, urging caution and flexibility in today's unpredictable financial landscape.
As a guy's been in finance, what did I see? I saw the October, 87 crash. I was there, I saw the Japan crash, right, in 1990. I was there, floor of Nomura Stock Exchange the day it crashed, the day it peaked. It didn't completely crash in one day, but so I saw the crash of the Japanese market very closely. The great financial crisis crash, saw that, was there, been there, done that, And now you get all the crypto crashes, right? 2017 was there, that 2013, I wasn't big enough that it mattered. It was insignificant for me. But, and then 2022, been there, lived through the crash, right? So, I've been through all these crashes, and the learning is crashes happen. And so, do I think that there will be another crash in the next 5 years? 100%. There's going to be, we are living in a very unstable world, right? The financial world is unstable. $35 trillion in debt, 122% GDP is unstable. There's a lot of things that are unstable now with this world. So holding Bitcoin and having leverage with it is unstable. So you have to allow for a lot of instability in this world. And I think it can be positive, right? It can work to your advantage. And that's why I would recommend people not be 100% in Bitcoin, right? I think, we've talked about this kind of independently, using the Kelly criterion or some other criterion, but you should be something, even if you're mega, mega bullish on Bitcoin, you should be something like 60 or 70% invested in Bitcoin. That's it. You should never be beyond that, right? Never, ever, right? Why? Because if it totally crashes, you're going to want to pick some up. You want to have some dry gunpowder, right? Maybe you're going to be able to buy some crazy miner for, a third of the price of the mining equipment, it's, I'm reading this book on John D. Rockefeller right now. And, he got really big in 1872, and there was this crisis in the oil world. And basically you'd walk to these other refineries and he would be like, okay, I'm going to buy you for 1/4 of the cost of your equipment. And people would be like, well, why should I sell to you? It's because you're either going to get that and you're going to grow with me, or you're going to get nothing. I'm going to wipe you out. Your quarter is going to go to zero. So if I were you, I would just sell to me. And everybody did it. And he was right. And they actually did very well. The people who did sell to him did very well because, so, I just think you need to have dry powder and other, and also personal things can happen to you. You can get, divorced, you can get a lawsuit, you can get hit by a car, a lot of things can happen to you. And we're just living in especially now, we're living in a very uncertain time. And I think you need to plan accordingly.
Bitcoin has skyrocketed to a new all-time high of $18,350, with traders now eyeing the $110,000 mark. This surge is driven by optimism surrounding Donald Trump's crypto-friendly regulatory stance and macroeconomic factors like the anticipation of monetary easing. Bitcoin has risen more than 150% this year, with continued institutional interest, such as MicroStrategy's ongoing purchases and Bitcoin's inclusion in the Nasdaq 100, fueling the rally. However, as Fred Krueger points out, these euphoric highs come with risk. Bitcoin remains highly volatile, and historically, it has experienced significant crashes, sometimes losing up to 50% of its value in short periods. While traders rush to capitalize on new highs, leveraging positions to amplify returns also increases the potential for catastrophic losses. Krueger stresses that crashes are inevitable, whether triggered by economic instability, unexpected black swan events, or market corrections. With soaring global debt levels and geopolitical uncertainty exacerbating risks, Krueger advises holding Bitcoin as a long-term investment without leverage, recommending a maximum allocation of 60 to 70% of one's portfolio. This strategy ensures investors maintain cash reserves, or dry powder, to capitalize on market crashes and opportunities, similar to John D. Rockefeller's approach during economic crises. As Bitcoin enters a new phase of price discovery, cautious optimism is essential. While the market's potential remains immense, prudent investors must balance risk, stay diversified, and plan for volatility. In Krueger's words, crashes happen, plan accordingly. What do you think of Bitcoin's volatility compared to other financial assets? What macroeconomic factors do you believe influence Bitcoin's price swings? Let us know your thoughts in the comments below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.